Justin.
So today I heard you put on some new trades, and I've heard that you were keeping a close eye on Tesla, particularly Tesla options.
Yes. We'll talk about Tesla first. Right now, there's some really interesting stuff going on, and normally when you have a stock, people buy shares of their stock or they sell shares, but there's also options on these stocks, and once in a while you'll have the options actually controlling where the stock goes. And we saw this a lot of the times the market is like this, and there are people who just trade based upon option makers because options are such a massive part of the market. They move the stocks just as much as people buying or selling stocks. So
Josh, let me just cover this. So what I hear you saying is that options, in a sense, when people start loading up on options because they want leverage on the underlying position, Tesla in this case, that forces the option makers to make sure that they have enough, not necessarily all the stock they would need in order to, let's say, meet a call, but just enough to stay within their risk preferences. And so when people load up on options, the option makers or the option people who write options are forced to go ahead and buy part of the underlying, which forces the price to go up, which causes people to FOMO into options, which creates a positive cycle or feedback loop, so on and so forth. That's what I hear you saying, right?
Yes, but it can go in both ways. And when we saw massive floods of people buying calls on Tesla. And let's think about that. If you're buying calls, what is the person who you're selling them to doing? They're selling calls. So at that strike, they now are short 100 shares of stock. And you know what happens when someone's short 100 shares of stock and the stock goes up? They have to cover. Now they have to buy 100 shares of outright stock. So these people that are flooding into calls, they're making and the price is going up. Now these option makers, they have to sell short stock and then rebuy it. So that's driving the price up, and we're seeing a gamma squeeze. And Tesla is just absolutely taken off. So today and yesterday, I bought some bear call spreads going like I think the stock's at like $1,000 or something like that, like a $600 mark. Just saying that it's like a 5-to-1 risk to reward ratio. If in a few months Tesla is below $700, I'll make 5 times my money. I'm fine with those probabilities. They're pretty cheap. So I'll throw $500 there and see, maybe I'll make 2.5. And that's just kind of decent risk to reward with the probabilities that I assign of something like that happening. So it's kind of interesting if people who really understand how markets move. I don't yet have this knowledge, but I would really suggest going to Spot Gamma, or they do incredible research on this, and their services just completely show you what stocks are being driven by the option market, and sometimes it's the entire market that is being driven by the option market. So Justin, what have you been doing? Then I'll go over my trade.
No, today. So last week was pretty active for me. We talked about it the other day. I kind of did some very speculative positions on some junior silver miners and some exploration guys in gold. That being said, I have been keeping an eye on First Majestic. I think both you and I don't want to give too much away, but I think both you and I are kind of looking at the options there, kind of scratching your head, saying, "Well, listen, I myself am very happy with my silver position." But once you've got that established, if you want to get a little bit extra or a little bit of exposure to the price of silver, well, miners are how you do it. And if you want to have like uber leverage, well, then you do options on the miners, so you get a double in that regard. So basically, just kind of doing that. But beyond that, lots of reallocation for me last week. It's been kind of sleepy for myself right now. I probably will look to, keeping my eye on Zen, keeping my eye on GME, and just various silver miners. But for the time being, the next probably reallocation I'm looking at is if Zim, or I'd probably follow you with Zim, right? So if Zim gets into the 60s, I'd probably start looking to take some off some of the calls. When GME finally floats back up to, let's say, the mid 180s, I will probably sell my GME calls then, take some profit there. But that's kind of what's on the forefront for me. Nothing imminent, or nothing immediate, but probably imminent.
Yeah. So what I'm doing right now is I'm getting a few call options on First Majestic going 800 days. I think I've gotten like 5 or 6, and I want more. But right now my margin is actually getting kind of up there because I have a massive position size on Zim. We've talked about that a ton. I've opened a few more calls, and I'm now just going to sit and wait. If I'm wrong, I'm wrong, and I have to suffer the consequences with that. Now is time to see if the trade plays out the way I suspect it to.
Yeah, absolutely.
What else have I done? I've gotten 800 day out calls on Newmont Gold. A few of them. I really see gold taking off in the next few months, and especially in the next few years. I do want to put higher position sizes on a lot of these companies, but we have to see how Zim plays out, because right now that's like a fifth to a fourth of my portfolio. So depending on how that goes, it really depends on what I'm allocating my resources to next. I have also gotten some calls on Rio Tinto, getting really cheap. They have a really nice dividend. I won't be collecting that dividend because I have calls, but I think it's a really attractive company at these valuations. SLV, I've gotten some calls, some bear call spreads, just kind of same thing, going super long dated. Not too concerned with the short term. I think silver and gold may have bottomed. Not sure. If they haven't, good. We can get more. If not, then I do want to reap some benefits. I have two more. TRTN, Triton, it's another shipping company. It has taken off the past few days, up like $6-7, and my options are up like 200%. I do not plan on taking profits yet because I sold one. I had 6 options. They're up about 200% total. Sold one. I plan on holding the other 2 for the next few days to weeks, seeing how it plays out. Then my last thing is on Tesla. I have a few bear put spreads. They're just, they're there.
Gotcha. Like I said, we'll see how it turns out.
Yeah. And all this is based upon Zim, because Zim is such a heavy portion of my portfolio right now. And I'm fine with that. I've considered a few times putting on a much heavier size position. But there is risk. Since I'm using options, if the market comes down, everything is going to tank. Or if it doesn't fall, it's not going to go up. And you have to understand that. So we'll see what happens.